Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A mainly lower, indecisive doji cross yesterday. Once again, there are two things to note from this and earlier moves. Firstly, the 50% Fibonacci line for the January 2021 to September 2022 move at 109.44 continues to be a capping resistance. Initially, it was only on a closing basis, but now is on a daily high basis as well. Secondly, I previously set up target X at 109.85. This was for the secondary hard to reach target with a small broken mid-January to late February bearish expanding wedge pattern. The high late last week was at 109.80, which has target X just about reached, I think. Further overhead, we have the broken green highlighted lower bull channel line, currently at 109.85. And that's of the October 2023 to late January 2024 bull channel. This has also acted as an overhead capping action, and I am still wondering if the market will now trawl along the underside of this lower bull channel line. Still wondering that, actually. Meanwhile below, well, we have a fairly clear zone until the combination of the green highlighted very slowly declining short medium moving average, currently 108.63, the 50% Fibonacci line for 2023 at 108.64, and the mauve colored slowly rising medium moving average, currently 108.53. Plus the gold-colored, slowly rising, long-moving average, currently 108.36. These last two have been the base for the drive higher from early last week. Now, so far today, not much, hanging around yesterday's close and just under the 50% Fibonacci line at 109.44. Cable, aka sterling against the US dollar. A lower but still indecisive spinning top, and the second bearish black crow after the previous session's combination of a bearish dark cloud cover pattern, a bearish opening black Mariposa, and finally a bearish double. Prices pushed down through and closed below the dark blue highlighted middle time, currently at 128.15 of the broken November to December 2023 shallowly bullish shift pitchfork, and tested down, penetrating the previously mentioned general congestion, which is now support, for between December 2023 to January 2024, and that's from the 126 area up to about 127.75. However, the market rejected the move lower, closing in a thin area between the overhead middle time and the congestion below. Further overhead, we have the November 2020 low at 128.52, and just above the declining bright red highlighted July 2021 to date downtrend, currently at 128.58. This downtrend is still the one to watch. Now, so far today, a very limited dip down to the top of the congestion below, starting at approximately 127.75, but not managing to pierce it well, not just yet. Euro sterling, a bullish opening white Mariposa and second bullish white soldier yesterday. It was a suitable follow-on high to the previous session's immediate countering bullish Harami. This time, the market utilized the support of the broken purple highlighted lower trend line of the late January breached but not broken small expanding wedge pattern. And that's currently 85.25 to 86.07. In the process, the market left behind a similar pipe bottom to the one seen in mid-February, leading to speculation by me mainly, but leading to speculation that we might have a larger double bottom pattern formed with these pipe bottoms. A little further down, we have the dark blue middle time, currently 85.17, of the November to December 2023 bearish shift pitchfork, and seemingly significant support working on a 2 consecutive close basis. Still further down is the bright red neckline of the May to August 2022 head and shoulders continuation pattern, currently 84.98, a further significant support. Meanwhile, overhead, the market tried tackling the combined December 2022 and 2023 lower 85.45 and 85.47 respectively, but failed to close over them. A little further up is the declining short-medium moving average, currently 85.63, and the recent congestion running up as far as about 85.75. Just keep an eye on that short-medium moving average. Its capping influence has been seen, shall we say, since mid-February, so that's one to watch. So far today, well, a try higher over the old lows at 85, 45 and 47. It's not really been sustained, not at this time, really hasn't, getting stuck there. US dollar against the Japanese yen. A reactionary bullish engulfing pattern yesterday, if only just. It wasn't that hard, as the previous session was an indecisive spinning top. 2 things to note here. Firstly, the last 3 sessions could be part of a 3-day bullish morning star pattern. We'll know in the next couple of days. Secondly, the support highlighted in my previous commentaries, notably the combined lesser Fibonacci line at 146.33 and the flatlining long moving average, currently 146.36, is substantial and rejected testing. Rejected testing on the downside. Meanwhile, the overhead rising short-medium moving average, currently 147.78, and the slowly declining medium moving average, currently 147.52, capped the market, but only on a closing basis. Overall, prices are still within 2 major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork highlighted in purple on my daily chart. We are in between the lower time below, currently at 143.99, and the middle time above, currently 158.08. We're also in between the middle time above, currently 152.18, and the lower time below, currently 144.90, of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. Now, so far today, well, a move either side, but still just about within yesterday's range, though we are testing towards the upside. Now, we ought to have a fairly clear area beyond on the upside the short medium moving average, all the way up to the low 149 area, but it's really not showing that at the moment, and I'm a bit surprised, not yet concerned, but a bit surprised. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish harami yesterday, if only just, after the previous session's bearish open and close black Marubozu. It was nevertheless a 3rd consecutive close below the dark blue highlighted mid-January to date ascending triangle pattern, currently 720.79 to 723.57. Now, yesterday I laid out some ideas of the potentials for breaking out of such a pattern. On the downside, thus the primary target is down in the target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The immediate obstacle on the way lower is the late February low at 717.97, which is where we roughly had yesterday's low. Then the recent congestion between approximately 714 to 716 even. Meanwhile, the top side has a lot of resistance in a way, starting with the rising short medium moving average, currently 719.44, then the May 2020 high at 719.64, and the declining medium moving average, currently 719.71. I can't help thinking that this has all been prompted by the unusual contrary weekly key reversals we saw in the Chinese yuan 3 weeks ago. We then had a weekly key reversal up in the spot USD CNY, the onshore Chinese yuan, and at the same time we had a weekly key reversal down in the USD CNY, the onshore Chinese yuan again, but this time it was in the 1-year NDF. Interestingly, last week saw another weekly key reversal down in the USD CNY 1-year NDF, as well as a fresh weekly key reversal down in the USD CNY 1-month NDF. So just remember which ones you've got. Now, so far today, a push up through the immediate overhead resistances provided by the short medium moving average, the medium moving average, and the May 2020 high. However, the market has seemingly been shy of testing the overhead broken uptrend of the ascending triangle pattern, but it's getting close. US dollar against the Mexican peso. An unusual pattern yesterday, an indecisive doji cross that was also an outside day. We nevertheless had a second consecutive close below the neckline of the February to April 2021 head and shoulders top, currently at 1680.57, despite clearly penetrating it on the upside. Further overhead, there is the combination of the highlighted dark blue middle time, currently at 1690.32. And as of the December 2023 to January 2024, mildly bearish shift pitchfork, as well, and more importantly, I suspect, by the support now turned resistance at 1688.97. This congestion at 1688.97 was formed in mid-December 2015 and more recently featured in mid-August and late December last year. So it has some pedigree. Now, looking below, we have some congestion between 1670 even to 1680 even from August last year, as well as the 2023 low at 1662.06. Overall, we are still well within the bearish shift pitchfork highlighted in dark blue on my daily chart. So far today, well, the market has been capped by the neckline and seems unsure as to pressing lower on the congestion below.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.